While investors continue to digest earnings from 4 big U.S. banks, most of those shares are rallying on those results. Our next guest says that relaxed banking regulations under U.S. President-elect Donald Trump could be a catalyst for further gains in these stocks. Michele Schneider is chief strategist at MarketGauge.com, and she joins us now. Michele, thanks a lot for joining us. First of all, what do you think about these numbers? This looks like 4 strong sets of results from these banks this morning.
Well, certainly not a surprise. The bank earnings have been good now for the last couple of years. But what happens, and what we're starting to see happen already, is somehow that number gets faded. And so even though they were much higher on the pre-opening, they're starting to sell off, as is the rest of the market right here. Not that it's negative, but it's certainly not as lofty as it was about 20 minutes ago before the market opened. So essentially, the bank earnings will certainly start off earnings seasons well. Obviously, we had CPI today, which people were very encouraged by. But I always look at that as lagging more than leading. So really, we have to say what would keep the banks strong, what would keep CPI down. It would be no inflation, number one, and number two would be really an idea of a soft landing. And I think the jury's still out on both of those.
You think the jury's out on a U.S. soft landing?
Yes, I do.
Why so? Why so?
Because I do believe that inflation is something that we have to be concerned about. And what's interesting is that we also had the Empire ISM numbers this morning. I'm just going to look down so I make sure I get the numbers right. It showed that prices paid were at an 8-month high. And more importantly, the outlook for the next 6 months is at a 2-year high. And we had other numbers similar to that come out. So people do have higher inflation expectations. So even though the yields are softer today, we still don't know if the Fed will be convinced enough to be able to lower the rates. And of course, if they have to raise the rates, there goes your soft landing.
Okay, let's go back to the bank stocks. How much of a tailwind could be a relaxed regulatory environment in the U.S.?
Well, that will help everything, right? So the other great statistic that we're seeing this week is small businesses being extremely enthusiastic about the notion of deregulations, and that, of course, will help the banks and help everything for that matter. But again, we have to really look at the idea that if we see any kind of massive market correction, which I would certainly not dismiss, I'm not bearish, but we saw about a 5% correction depending on where you were looking. If it got to be more of a 10 or even 20% correction for any of the catalysts, mainly it would be either higher tariffs, which would be inflationary, or some of the policies that Trump is putting forth that don't necessarily get enacted, or they fall into roadblocks, then all the banks and everything could fall with just a sort of an exit of capital allocation, as we know has happened in the past.
Yeah, are the U.S. financials one of the sectors that you like right now?
I personally would not go there as my favorite sector. I'm more looking at things that could benefit regardless, of inflation, also some of the things that will actually benefit because of inflation, and also a benefit because they're made in America and they may get a pass on tariffs and some of the other policies that we're talking about, even the potential trade war type of stuff that's going on with China.
You like electric vehicles. That's one of the sectors you like.
I do, and I know that's not necessarily the most popular notion, especially since it's been said that he's the first day Trump is going to come in and basically allow the spigots open, if you will, the drill baby drill, which would drive potentially oil and gas prices down. It may not, by the way, but that remains to be seen. So therefore, one would conclude that gas-powered cars would be cheaper and more attractive, but I don't necessarily think that that's the trend. I think the trend, especially in the younger generations, is towards EVs. 99% of people who own EVs buy another EV. Certainly right now with Musk being very, very important to the administration, I think a lot of the gossip about him getting rid of the EV credits and things like that may be just that, gossip. So I like that area. I think it has been beaten up in 2024 and could come back in 2025.
Okay, briefly, you like what you call the vanity trade as well. That sounds like the beauty stocks.
Yes, well, it all really is dependent on the diet drugs, of course. And it's been explosive in terms of the usage of the diet drugs over the last couple of years. And obesity numbers are, they're staggering when you think about 32% of the adult population globally is obese, which means they have a body mass of over 40. And so more and more and more people are looking at the diet drugs. They're becoming more mainstream. Yes, they're still costly, but it's what happens as a result of people taking that. Now, just say, people are saying to me, no, I think you're wrong because of RFK Jr. is against them. I don't think you can stop this train. So we're looking at skincare and stocks like e.l.f. and Ulta, really more beauty, where people buy makeup, maybe even Nike and exercise type of equipment, maybe goes into supplements and things like that. So you have to watch those areas. Again, all of them were beat up and now could make a comeback.